Hello and welcome to the Real Estate Macro Podcast. Joining me today is my friend Eric Charlton in upstate New York, a real estate investor. And Eric, welcome to the show.
Doug, happy to be here.
Eric, I guess we need to get this out of the way ahead of time. Patrick Mahomes and Josh Allen are both very good quarterbacks. Can we agree to that?
We could agree to that statement, I guess. Definitely.
So now that we've got the real controversy out of the way, why don't we move on to Eric? How did you get into real estate, and how did you get here today?
Well, thanks for asking me and bringing me on the podcast, Doug. I appreciate it. And yes, the Bills. I am a Bills fan. Josh Allen is awesome. Just got back from the game yesterday.
He's very awesome.
Yeah, I went
I'll
to
tell you, Chiefs fans really like him. Actually, for on balance, I'd say they really respect the guy. Like, man, that guy's good. So it's a lot of
Bills
fun.
had a game last night. Went to the Sunday night football game. Came back around 1 a.m. Traffic was terrible, but it was a great game Sunday night. Beautiful night here in Buffalo, New York. But we're here to talk some real estate. As far as me getting into real estate, I owned a couple duplexes, and I ever probably 7 years ago. I'm 33 right now. I bought my first duplex 7 years ago. But on the commercial end, it really was my business partner that got me into real estate. He's my good friend and now business partner. We both played on the same hockey team for over a decade now, and I've watched his portfolio grow into what it is today. And over the decade, he went from wholesaling and fix and flipping to buying and holding, or fixing and holding. And then he just grew. He just continued to grow his holding company into the 50 plus units he has today. And when the pandemic hit, so it kind of was a mixture of the pandemic and my business partner, because when the pandemic hit, my job, I have a W-2 job. I work for my family business, but we had to lay everybody off when the pandemic initially hit. And that really stopped my cash flow, my income. And this was before the government stepped in. A big panic came over me, and I was taking my income for granted. And it really changed my it was a mental shift when I looked over at my good friend and now business partner. And he took his he stopped buying properties when the pandemic hit, and he has 4 kids and a wife. And he just stayed home and spent time with his family, and he was living off of his 50 unit rental portfolio. And that was the first time I witnessed true financial independence. And then the game completely changed for me from a mental state, right? And that was my first really look into how powerful real estate is. And so he wasn't working. He had his guys maintaining his properties. He was just living off the rental cash flow. And that didn't even count into fact the principal pay down every single month, and the overtime, the appreciation, and all the tax advantages that come with investing in real estate. So it was pretty powerful just to see him and his family just living off of his rental portfolio when the pandemic hit.
Boy, no kidding. It's like one thing to read Rich Dad Poor Dad, but another thing to see it like literally playing out in front of your eyes. That's an incredible opportunity, isn't it?
It was something. And then I did go into reading that, and then Rich Dad Poor Dad was definitely a big hitter, big mental change in my life, and just really kept me going. And then I finally took action and partnered up with my business partner. And we at the same time, he spent a decade in the residential space, dealing with single family duplexes, and he had like 20 some properties totaling 50 units. And he didn't want to spend another 10 years doing the same thing and getting to 100 units. He wanted to spend his next 10 years really scaling up his company and going after commercial buildings, like larger apartment buildings. And in order to do that, you can't wear all the hats, right? So he was wearing all the hats in his residential portfolio, and he understood that, right? And multifamily is a team sport. We always hear that, and it's true. And I haven't met Superman yet that does everything, absolutely everything.
I actually think it'd be insane to try to do it all yourself. If you were just starting out and trying to do it all yourself, I mean, even if you had a ton of capital, why would you ever do that to yourself? I don't know.
Yeah, so that actually it was a good timing for him. And he had the underwriting down, he had the operating down because he's been doing it for a decade and that's his lifestyle, or it's his way of life of just
Right.
investing in real estate. He doesn't have a W-2 job. I had a W-2 job. I've been in sales for 10 years, ever since I graduated UB. And I have a powerful network, or I have a good network, and I've been in sales for 10 years. And my lanes are in our company that we created are capital raising, investor relations, and whereas my partners are operating and underwriting. And we both kind of tackle acquisitions as well, to collectively. But yeah, it's fun. It's been fun so far. It's been about a year and a half since we really got going, and looking to build this thing and continue to take action over the next decade.
And it seems like the sales would translate nicely into the capital raise side. Am I on track on that?
I mean, I think it's helped me out. Well, first, I have no problem talking to people, right? I like it. I like communicating. I like socializing. My partner is more of an introvert, and not saying you can't capital raise as an introvert. It's just my being in sales has helped me go into those conversations, kind of lift under the hood, dig a little bit. I like talking about people's finances. I like where they're investing. I like getting into that conversation, and sometimes it's uncomfortable at times, but it's needed. And if you want to know people's goals, if you want to understand where they want to be and how they want to get there, it's definitely needed conversations. And you could bring a product that really opens the door to them. And instead of investing in stocks, bonds, mutual funds, they can build their wealth through real estate opportunities. So it's been a quite the my parents own a Xerox dealership, so I've been selling
Oh,
copiers and
interesting.
printers. Yeah,
Yeah.
I've been selling copiers and printers for 9 years, so it's definitely a shift selling copier and printer and selling
Eric,
an
have you ever
investment.
once sold a standalone fax machine?
No, 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 no. Yeah, but the fax is all. Yeah, it's
It's
dying
all
in the
included in now,
but
isn't it? I know. It's like, oh my gosh, like an actual standalone fax machine. When's the last time you seen one of those?
Right. But
No
selling an
kidding. Yeah.
investment opportunity is much more appetizing to me, and much it's where my passion is
Yeah.
rather than selling a copier and printer. And I
Yeah.
like
I
selling copiers and
yeah.
printers. It makes me money. It's my income.
Right.
But shifting and selling apartment building, like an investing opportunity, is a lot more where my passion lies. And it's been fun. Hopefully, we continue to build the company, whereas I can move over full time. But we'll see where it goes, and that's the plan essentially. Just keep on taking action
And
until we
and
can.
Eric, it seems like you're pretty close on a 40 unit. I don't know if you can talk about it though. That's the question.
Well, I
Uh,
mean, we can talk. So that's our second project together. Our first deal was an 18 unit, and we're doing everything in Buffalo, right? That's where
right.
our all of my partners' property management team is. We want to manage these buildings ourselves. We want to have control.
Mm.
We have a game plan. We want to execute on that game plan. And
That's interesting. A lot of people get this advice coming out that, oh no, 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 you should always go third party. Why have you selected to keep it in house?
and a lot of people do like understand that they are not fit for the property management of these companies, and they don't have that experience. And if it were just me buying these apartment buildings, I would probably third party manage it out. But my partner has that decade plus of experience and he already has these systems and processes built out, and we're just kind of adding buildings with larger units to his machine already.
Right.
And so I'm leveraging all that experience and all that my partner has built over his decade in investing in real estate. And it really has made it easier for us just to the 18 unit it was a heavier lift. The
Mm.
rents were about 35-40% below where the market is today.
Oh wow.
And yeah, they haven't been touched. Those a classic heavy lift. All these get all these units renovated and bring them back up to market, capture that market appreciation that the landlord hasn't captured because he likes the tenants too much. He knows them all by name. He doesn't want to raise their rent.
Right.
And there's a couple ways you could think about that. but we've done really well on that property. And actually, so a lot of the tenants, the residents that they lived with the previous owner, are still with us now, and they're paying more, and they're happy. And we've upgraded their units, and we've got a couple success stories about that. But it's as far as we go mile deep in Buffalo and manage our own properties, I think that's the best way to build out our business. And just we want control. At the end of the day, we want control of what we do. So that's why we do it.
It always seems to me, and again, I think it's an interesting conversation. I really think I lean a little bit more towards self management myself. I feel like the conversation's interesting though. It seems like your tenant relationship is so important to the business that it makes sense to me. If you can do it well, go ahead and keep it because it's so important to your business. And I think I kind of lean toward that idea. But
Yeah, I mean, well, when you're telling investors, when you show a game plan to investors, and you're gonna invest, or the rehab budget that's hundreds of thousands of dollars, and you're going to bring the units up to market, you want to know that where that money is going. And these are our friends and family, right? We didn't have a whole book of investors before we got going. It's literally our close friends and our family that has backed us on that 18 unit property just to get us going. And you want to know where those dollars are being spent, and we want control over where those dollars are. So it's in our best interest, it's in our investors' best interest. We have the experience to do it. Why not do it ourselves? And as well as just as we continue to buy apartment buildings, we can grow out the property management team as well.
absolutely. And Eric, moving on from just the property management side, what else have you learned about the business that was kind of a surprise, or how is it your impression from doing this 18 unit moving toward this the bigger properties? What has been the biggest insight so far?
Well, a couple things. First is proof of concept, right? I've, when we first got together and had a game plan, whiteboarded the entire business, and said, this is what we're going to do from soup to nuts, A to Z. And it was cool having that game plan, but just to find that opportunity in a year and a half ago, the market was super hot. I didn't know if we were going to find an opportunity. And I was writing handwritten letters. I'm searching off market for these deals. And that's another thing with Buffalo. We've both, my partner and I are 33 years old. We've lived in Buffalo our entire lives, and we have long-term relationships here, and we see that as a competitive advantage in the marketplace. And that's what we relied on for this 40 unit we currently have under contract. That's came from straight relationships. But the 18 unit, I was writing handwritten letters, and I'm still writing handwritten letters just to find an opportunity off market. And I feel like, and we closed, right? We got it under contract. We raised the capital, we raised the capital. We closed. Now we're executing our game plan. It's been about a year, and the proof of concept, seeing that is possible, and we could do, even in the hottest market that you can imagine, you could find mom and pop operators out there that with distressed assets that don't have capital to really inject into those assets to bring them up to market, and they want to sell, and they're not going to they can't sell at where they want to sell because the income property isn't bringing in that income. And then we take over, we bring it up to market. And the proof of concept really opened my eyes on like how, wow, like this is possible, this is scalable, right? Multifamily is scalable. We talk about that a lot. And it really gave me the motivation to go out there and go get more. So another thing though I wanted to mention is just seeing the value that you really can provide. Because we had the game plan, and rents were this much. We wanted them to get to be this much,
Right.
and seeing that that value that the residents see. I got a quick story for you. Clara, who's at our 18 unit, she's I don't know how old specifically, but I know she moved in 50 years ago to her
Literally the
unit.
same spot for 50 years.
Yeah,
She really
50
liked it.
years. So she's been in the same unit for 50 years. She was paying $600 to the old landlord. Great deal, 2 bedroom, great location. And we actually renovated the unit across the hall from her. and completely renovated, made brand new stuff, brand new floors, appliances, new paint, everything. And she did not want us to. Our goal was to have Clara move in it,
Yeah.
and we gave her a sweet deal. She wanted the unit. She saw that value, and she signed up for $1,000 a month, knowing we can get it for more than that. We gave it to Clara for $1,000 a month, and she was so happy, right? Seeing this person who's lived in the apartment for 50 years see the value, paying $600 to the old landlord, is totally down to pay 40% more and move into a new unit right across the hall. So not only do we have a happy resident that's in a new unit, she's happy, we're happy, we're getting more cash flow from her moved in unit every month. We're getting $1,000 a month from that tenant, actually. And we have Clara's old unit that we now hasn't been touched in years, right? Then we have her old unit to completely renovate, bring up to market, and capture that market appreciation. So it's a three-pronged win there. And just seeing the proof of concept of all this happening and just firsthand, this is what's going on with our properties. It just kind of is giving me more motivation. Hey, this business model works, and the value is appreciated. People understand that value that you're providing, and they will pay for it. So it's just nice to see, and it helps me going. And we're hopefully after this 40 unit, right, hopefully we're closing next month, but after that we keep on running.
Eric, what if you added a zero and had 180 units? How about that project?
So a lot. I do have my opinions about going larger, and obviously we do want to go larger. A lot of people out there you meet in the real estate industry, they're searching. Their bar starts at 100 units.
Mm-hmm.
So whereas we're in, our first deal was 18 units, our second deal is 40 units, 40, and we're kind of in that sandbox where it's not 100 units. We're kind of doing our own thing, and we can continue to stay in this sandbox in the sub 60 range and just continue to accumulate properties and do well. I just obviously you want more. You want 100 or 450 or 400 unit apartment buildings, and maybe I'll work my way to there. Again, if we were to get a 400 unit apartment building under contract right now, we couldn't take it down. I don't have the investor network to take down a project like that. So, and we have no problem partnering up with people who do have that network.
Right.
We've got to find that opportunity and find that value for other partners to see. But I mean, how would the seller, we want to build our credibility, right? We want to go mile deep in Buffalo and really build out our credibility in the marketplace. And, soon, hopefully I'll be only playing in that sandbox where we're bidding on hundreds of unit apartment buildings. And maybe that's a decade from now, maybe that's 5 years from now. I know that's not next month, right? I know that's not next month, but hey, I'm still writing letters. I'm still finding those opportunities and marketing myself to apartment owners. And if what you can't really decide what opportunities come at you, it really is just this is what it is. And we're taking every opportunity what it is. So if a 3-digit apartment building lands in my lap and the opportunity is there, we're going to go after it. There's no question about that. I feel confident that maybe I don't have the investor network to close it myself, but I know people who can partner up and help me do that together collectively. So I guess I'm not going to only search for them. I'm not going to narrow it down and concentrate on bigger apartment buildings, but I'm not going to turn one away if something comes across my way.
Absolutely. And in terms of off-market marketing, have you found anything specifically that's really worked real well for you in terms of what you say, or have you tested different approaches, or is it just a matter of, hey, just repetition and a numbers game for you?
My thing is just one. I just wrote a letter. It's hi, I'm Eric. I'm a lifelong resident of Buffalo, New York. If there ever comes a time where you want to sell your apartment building, I'd greatly appreciate the opportunity to be your buyer. And then have I hope to hear from you. My contact information is below. Have a happy and healthy rest of your year 2023. That's my only that's my letter. It doesn't change, and it's worked for me before, and it's hopefully going to continue to work. So that's my only strategy. I don't have too much experience on hunting down and marketing for apartment buildings, but it got us the 18 unit, and I'm just going to continue doing that.
That's incredible, and it seems like going off market like that does really work. So sometimes it is great to work with brokers, but going off market's another way of getting deals that if you can get that to work, it's an incredible opportunity.
Well, you just go right to the seller, and that's like, and you have and it's its own sales cycle, right? I've been in sales for a decade. I understand that you just don't they don't sell it to you tomorrow, or you don't it doesn't happen tomorrow. Like,
No, wait, Eric,
Mhm. Yep.
commercial real estate is a one call, one letter close, right?
Yeah, that would be wonderful, wouldn't it?
Wait a minute. I'm confused. You're saying it takes time?
Yeah, it takes
Oh,
touches. Yeah, it takes relationship cultivating, not only with your investors, but with the sellers, in my opinion, and with the brokers too.
yeah,
Obviously, you gotta have good relationships,
yeah.
and it is a relationship game. And after we closed on the 18 unit, a lot of brokers in the local area reached out to me, and they were starting just to throw me deals just because we had one leg of credibility when we closed on
Mhm.
the 18 unit. So it was really cool to see that, and had our deal flow was kind of organic, right? We had deals coming in from brokers. Now these aren't completely off market deals. They are sending these deals to the other buyer their
Oh, for
buyer
sure,
lists.
for sure.
But it is nice to get a new, like, buildings that are going to sell in Buffalo, and for us to underwrite and just to add more just to see what's going on with the market. You have a good finger on the pulse with the local market here in Buffalo,
Yeah.
and those broker relationships will continue to grow. And that's actually how we found the 40 unit. My good friend, I also play hockey with this friend of mine who is a broker,
Ah,
and it was his family property that's exiting. And he's like, hey, you guys closed on the 18 unit. I didn't even know you guys were in real estate, investing in real estate. I have this opportunity before I really bring it to market. Why don't you guys take a swing at it? And the negotiations took a couple months, but we agreed on a price, and we're moving forward with
Eric, it seems like play hockey is the theme I'm getting here. Maybe play
it.
some hockey to build relationships.
I think it's
No,
relationships. You got to do
yeah,
whatever you do, wherever your passion is. You got to go out there and just get involved, and just you have to continue these relationships, and that's part of what I like. And I it's not like you got to value time too, right? What relationships are worth your time, and kind of just live, but like understand, hey, like relationships definitely can take you to the next level. And it's not all about what you know, right? It is who you know as well. It'll help you out. So yes, I do play hockey. I do have other passions, and I definitely try to keep when I'm doing those things, when I'm playing hockey, and I have good relationships with I make my friends, and just continue those relationships. And a couple of our team name is Buffalo Dynasty. That is
yeah,
my partner, business partner, and I's hockey team.
yeah.
So yeah, I'm definitely passionate about hockey for sure.
Well, and I'd like to double back to something. I think that what you've done is really helpful for people just starting out that are kind of confused about brokerage relationships. One of the tough things about getting started with no experience and no track record is, well, how do I talk credibly to brokers? And I think it's interesting what you chose to do. What is, well, let's go with the direct route first. And you built credibility just even with one deal. Brokers view you differently, and it's a completely different conversation. And I'm not to say that you have to do that, but it's interesting to show what that did for you.
Honestly, I didn't even know, because I'm just jumping in. I owned a couple duplexes, and my partner's like, we let's go syndicate company. I didn't know what a
Right.
syndication was, and what essentially what we're doing. And I didn't know broker relations was a part of that. And as I listened to more podcasts and got more obsessed with multifamily real estate, definitely broker relations is how you get deals,
Yeah.
and that's important. But I didn't know that jumping into the game, and I was just like, I know how to prospect, I know how to look for sales, and that's what I've been doing for a
Yeah.
decade. So that's where I was like, all right, let me just go write handwritten letters to all these homeowners every 6 months. I'm gonna hit them with a letter, and we're gonna find a deal that way, right? And
That's
then
right.
that's what happened.
No, that's incredible. I think it's actually kind of rare these days to see a direct acquisition like that. It's been a while since I've heard anybody talk about one. I think it's really cool because
Well,
it's
that's because a lot of people play in the 100+ game, and
yeah,
obviously that is a different type of sales cycle, right?
yeah,
If you're dealing with mom and pops, they probably don't have great representation, and you can negotiate directly with them. And it's not as an official type of selling cycle that a 300 unit apartment building would typically go through.
boy, that's an excellent point too. So just getting starting out and you want to go smaller, direct mail is way more interesting. And I understand wholesaling, they do quite a bit of direct mail like that too. So it's interesting how that kind of that's it's the next it's kind of like that transition period from going into larger deals is doing smaller deals with some direct mail. That's really awesome.
Yeah, it's definitely a good strategy. I definitely want to continue to do it, and it gave me the proof of concept. So no
Yeah,
matter how big we build this company, I will always someone will always be writing letters, because
right.
just because it's our core. I believe it. I'm going to continue to have us do it for as long as we go.
Absolutely. In terms of the market shifting at all, have you seen any real change in the market in terms of response and we feel like there's maybe in 6 months a huge change. This my crystal ball is broken, as they like to say in this business. But
Yeah,
are
I
you
mean,
feeling any difference yet, or
I would typically like to rely on my partner's experience that
mm,
has, a decade of just being in the market, investing in the market. And I have to a degree as well, but my personal opinion is, we have no control over the market, how the
mm,
market's doing. We do have control on what we buy and how what we acquire as a company, and they're all math equations. It's not one size fits all. It's a bad market. You can't invest in a bad market. So yes, interest rates are rising. It's changing the landscape. It's changing the seller's landscape. It's changing a lot. There's a lot of things that are impacted because of rising interest rates. And I like our 40 unit, it's would we like it at 3.5% interest rate or 4% interest rate? Yeah,
right,
we would love it. But it still works at 5.5. It still works at 6. And you know what? In years down the road, I don't don't quote me on this, but I would think interest rates fall. So
yeah,
if the multifamily is a math game, so if the math works out and the numbers work, and we're not crazy, we're conservative on our rent hikes. We are realistic. My partner's the operator. He's going to be the one operating,
yeah,
and he's on the hook for these rent hikes,
yeah,
and we are conservative. And if
yeah,
the numbers still work out, if the numbers still like make sense for us and our investors to move forward, even with a higher interest rate, we're going to go after it. So and down the road when we refinance, I'm hoping interest rates are lower. But if it works at 6%, it's going to work at 4% if they drop. So that's
right.
even potential more icing on the cake when we get down the road. So I don't know where there's going to be more opportunity with the landscape changing. And with my partner Chris, he was talking to me, and he was so excited that and I'm worried, right? I just
Mm,
first time being in the industry when the market's
sure.
coming down. I'm kind of worried out there, but he had a different perspective, and he's been investing in a bull market essentially for 11 years, and he's well liquidated. He's got his portfolio beefed up, and he's so excited to be an investor in a buyer's market, and it's going to create opportunity. And we are going to continue to hunt down those opportunities. And like I said, it comes down to math, right?
Yep.
So if it still works in the landscape, the demand is way higher than the supply out there in Buffalo. No, nothing's higher interest rates aren't going to fix the supply out there. And we know that there's a demand supply issue. So if the math works out, if we check out, it's not scaring me personally from going after it.
And Eric, on this 40 unit, are you guys using bank debt or fixed for a
Yeah,
period, or
yeah,
how
we're
you
going.
getting at the
It's
risk problem?
yeah, it's built in 2009. It's a nice property. We the only way to go this deal to make it make sense would be to go government financing and agency debt. So yeah,
That's
we're putting
awesome.
Fannie Mae on it.
That's incredible. And it seems like with his track record, easy to get Fannie Mae. I understand you have to have a bit of a track record to work
Yeah,
with Fannie
yeah,
Mae. It's like,
it's crazy because yeah, I wouldn't personally be you have to have a net worth more than the loan, this
right,
$2.3 million loan
right.
or whatever it is.
Yeah,
And then thankfully my partner's been a successful real estate investor, and we're big enough to take down the loan ourselves, and we don't have to bring on a KP. But ideally we do want to have deals that are bigger than what we can take on, and
yeah.
we do bring on a bigger partner and we take it down ourselves. That's the business model we're kind of creating. But as far as this 40 unit goes, yes, we have enough liquidity and net worth to take it down ourselves, which is pretty powerful in my opinion.
That's incredible. And Eric, in the process of managing the interest rate risk, um, did any bridge cross your plate there? You're like, oh man, that would be interesting, or was it like almost always like, oh dude, let's just go with fixed Fannie and the whole time, and pretty much that's the way we're gonna get at it.
I mean, we did get some other quotes, right? But with the landscape the way it is, like nothing even came close to what the government could
Yeah,
provide, right?
right.
So it just made no. We're getting interest only. We're getting a couple years of IO, and the rate is really aggressive in today's landscape. So it's we're happy with what we're at, and we did get other quotes, but it was a no brainer to do what we did.
And Eric, are there any questions that I didn't ask you today that you like? Man, we should talk about X that I didn't ask.
I mean, it was fun coming on here. I didn't really know what it's I came on at 8:30 in the morning right
Right.
after a Sunday night Bills victory,
That's
and
right.
I really had no idea what we were going to get into. Obviously, real estate, but nothing specific. I'm just happy to field these questions for you had for me, Doug, and really, thank you for bringing me on and spending your time allowing me to come on your podcast
No,
and
I'm really excited for you, Eric. I really the second we met, I'm like, I think Eric's going to do really well in this business,
I
and
hope
it's been a
so.
couple months, and I'm like, I want to talk to Eric on my podcast. I think they've got something good going on up there in Buffalo. Let's talk about what they've got going on.
Yeah, I mean, hopefully we can continue to check in, and hopefully we'll
For
still continue
sure,
to make
that'll
moves
be a
and
fun, like an
grow.
annual check in and see
I
how your
love it.
business is growing. That would be incredible.
Yeah. Well, thanks, Doug. I do
And
appreciate it, and I'm always here
absolutely.
for you, man.
Absolutely, I sure appreciate it. And Eric, how do they reach if folks want to reach out to you and talk to you about your business and whatnot and want to get to know you a little bit? How do they best reach out?
I'm active on LinkedIn. My name is Eric Charlton, and our company name is Buffalo Dynasty Ventures, and our website's actually buffalodynastyventures.com if you want to check that out, learn a little bit more about us. But that's it. Yeah, you can catch me on the social media, and I'd be happy to connect.
That's awesome, Eric. Thank you so much for coming on the podcast. I appreciate the time today.
I appreciate it.